Righto, money miners. Welcome to another bloody beautiful JD only chat. This one with Johnny Forwood and Hedley Widdup. Did they mention Axis mining technology by any chance, JD?
I could see it on the tip of their tongue, but we were talking about so many other things. It actually didn't get mentioned, mate, but they were eager to.
There's a lot of parallels between John and Hedley, like trustworthy blokes like Axis are the trusted name in gyros and any orientation, instrumentation, anything to do with making sure you know where the frickin' drill hole is.
Very true.
All I need to say, free trial on offer if you drop the name Money of Mine. What a deal. JD, loved your chat with Johnny and Headers. Bloody absolute two GCs. And I actually like it how Headers took over overrated, underrated at the end and banged it back on you.
He took charge, mate. We could have spoken for a couple hours there, but too bad. John had to duck off, so I made him a bit late for his meeting. But Hedley was scheming, and he had a few more in his locker. But it was good to have the tables turned and had a few questions flipped on myself.
Yeah, mate.
Both former guests of the show, both resources fund managers. Yeah, both geologists, aren't they, JD? And so
yep.
So
a lot of real junior focus.
Awesome. I can't wait to hear it. I haven't heard it yet, but I'm looking forward to it.
Mate, anyone that's interested in the bloody small cap developer space, these two guys are all over it. Lion Selection Group and Lowell Resource Fund. So let's rip in, eh?
Let's do it. All right, Money Miners, we've got a special show today. With me, I've got Hedley Widdup, the CEO of Lion Selection Group, and John Forwood, the CIO of Lowell Resources Fund. Thanks, guys, for joining me.
Pleasure to be here. Thanks for coming into the office too, JD.
No, not a problem at all. We last spoke individually about 10 months ago. I think it was actually in the same week that I spoke with each of you. And since then, heaps has happened. So at the M&A side of things, we saw Azure, one close to your heart, John, get taken out. BHP pursued Anglo for a while. On the commodities front, copper ran to over $5, something we didn't think we'd see for a little while. And then on the other end of the spectrum, lithium peeled right off. So we've got plenty to talk about, but I want to start this conversation talking about the predictions you guys made for 2024.
They're in trouble.
So it's a bit like parent-teacher interviews.
We had both of you on for a brief stint talking about non-consensus picks, high conviction picks and the like in December of last year. Now we're going to do a bit of grading right now. So to start with, Hedley, you picked gold to perform well against a backdrop of poor performing commodities. And John, you picked platinum to do quite well. So I just want to check in your confidence. We're only halfway there, but Hedley, how are you feeling about this one?
Well, I think I'd have to say so far so good. I wasn't wishing for a lot of commodities to weaken, but it seemed certainly that the environment was good for gold. And coming into the end of last year, I don't think we really sort of broke it down in the podcast, other than to say what's up and what's not. Gold had a bit of buying support from an unusual area being China. So I was really curious to see how that would play out. So far, it's added some robustness. Gold's a great place to be from that perspective. And I think a lot of other commodities have weakened. Maybe not quite to the extent that I might have expected, but enough to be close enough to being right if I'm self-grading. But like you say, it's not the end of the year yet, so we won't count those chickens.
That's it. The fat lady hasn't sung. And John, platinum, PGMs more broadly, we're seeing, CapEx getting turned off, pushed down the line, mines shutting, shafts shutting. How are you feeling about that one?
Yeah, I think I'm still, platinum and PGMs have done modestly okay. And I'm still quite positive about them. There's still a deficit for both platinum and palladium. And South Africa being a big, producer of those metals, they've just been through, like a lot of the world, they've just been through a election cycle. And, come out the other side of that, we're probably going to see Anglo disaggregate and Amplats will be, have its own life. But a lot of those shafts are probably being or have been kept operating, and they're probably not economic to do so. So I think post the election, there's possibly some shafts that are going to shut, and that will restrict supply even further. And on the demand side, I thought 2024 was going to be a year of competition between the electric vehicles and the ICEs. And the winner at the moment is the hybrids. And the hybrids, obviously still need catalytic converters, and they use PGMs. So I think the demand side for PGMs is probably looking better than it was, 6-12 months ago.
Yeah, the core's looking quite prescient. I noticed the second quarter had the largest inflows into physically backed palladium and platinum trusts that they'd seen in a long time, listed on the NYSE. Now, lithium is another one, and you guys actually went somewhat head-to-head on this one. So, John, you called for a rebound in lithium. Hedley, you spoke to a bit of a reckoning with the lithium stocks. So, coming at it from slightly different angles, and it's been sort of mixed messages. We saw quite a low through January. I think $850 was one of the prices I'd seen in January for spodumene coming out of WA. And then we saw a bit of a recovery through to 1,200-ish, as clear as you can sort of get with the lithium price. And now the last month has been pretty hard. So, Hedley, how are you seeing the sort of sting and the retail kind of mania, if you will, come out of lithium?
Well, strongly guided by, when a price is going up and it's going up rampantly, and then maintaining levels that provide extreme profitability for producers, which is the conditions that we saw in lithium in 2021. Equities follow strongly. And someone close to me is very fond of saying the market will pay far more for something that it doesn't understand than something that it does. So, it was a perfect scenario for equities to overshoot to the upside. And, you saw large numbers being paid for exploration plays, some of them better than others. And, I suppose that implies that some of them were much worse than others. So I think the reckoning from an investor's perspective and liquidity falling out of the lithium space looks like it's played out as I would have expected, and without sort of having an understanding of where lithium would settle and what that would mean for profitability and things like that. Just having fallen, I think that requires a fair period of time for the market to build up the confidence again for risk investors to say time to pile into to lithium stocks, particularly if you're going, let's go beyond the producers and look for somewhere where you've got real equity price leverage like explorers. We've seen a lot of them all but abandoned. And I think the level of shorts are still pretty high on the lithium producers. So, across the market, even I would say the so-called sophisticated investors, or at least the weight of money, looks to be betting against lithium in the shortish term.
And John, how are you sort of seeing it?
Yeah, look, the equities have been absolutely smashed. Some of those explorers are probably down to 10% of what they peaked at. I think it is still a very small market, and there is obviously an oversupply there at the moment. Question mark about the highest part of the cost curve in terms of, say, Chinese lepidolites. Are they still producing? Possibly they are. When is that supply going to come out of the market? But it will at some point at these levels, I think. I think in the midterm, I'm still optimistic about lithium. And you are, a little bit similar to nickel. That the equity markets have completely abandoned the sector, or largely, but you're still seeing industry players. I think this morning we even saw Liontown announce a small offtake, with one of the consumers. So you're still seeing industry players wanting to get hold of lithium. So I think that's quite that's a positive sign even. So I think there's some pretty interesting opportunities in lithium, but not in the short term.
So to zoom out and look at the junior market more broadly, your highest conviction pick was for inflation to moderate. Now, obviously, that has a huge flow-on effect onto the risk capital. Are you in the bucket of people saying interest rates will come off this year or early next year?
Look, I think it's a week-to-week proposition, and sentiment flips and flops. And this week, I think it probably is. People are saying inflation's moderating with data out of the US last week. So if I had to place a bet, I would say there's going to be some moderating interest rates this year, and as you say, that's really positive for the junior end of the resources sector.
And Hedley, how do you sort of think? Obviously, you're playing very much in that risk end of town as well. Were you sort of seeing obviously we can get into liquidity and the mining clock in a moment, but more broadly, what's your sort of thoughts on the temperature around the junior end of the market?
Well, I think I can't remember if it was my high conviction call or my anti-consensus call or whatever it was. I think what I was most convinced of was that 2024 was going to be a year where sentiment for juniors didn't recover all that well. So I think, reading it as it goes for now, and we've still got another 5 or 6 months to play out before the end of the year, but that expectation seems to have, played true so far. This is a corollary of exactly what John said. Whilst interest rates are high, or higher than people are happy to stomach, and when they can get a good equity return off of large cap stocks and an ideal return off of cash in the bank, they don't need to be taking risks on explorers, and they don't. The amount of liquidity which is available for the junior space is still very low. Having said that, I think the conditions that we experienced in sort of January, February, March have, probably solidified somewhat. Whether that means we've been right through the bottom and we're now facing the early parts of a recovery, it's always difficult to read that. But I think that, is liquidity high or low? It's low. And so, I'm pretty comfortable with that forecast for now.
So, John, when we sort of traded emails before, one of the points you put forward was what turns the junior end of the market around. So to sort of start, I want to just pose the question to you, what does turn it around? Is it just rate dependent, or does something else need to be the catalyst to get more capital and liquidity into the junior end of town?
Look, I think, we've talked on interest rates, and that's a massive one. It's interesting to see, where Bitcoin, in terms of where speculative money goes and what Bitcoin's been doing, and Bitcoin's been on a real downer over the last few months, but it's sort of ticked up a bit more recently. So that's a really important one. I think M&A and driven by things like the WA gold miners, stashing away nice lots of cash and then looking to do M&A, and we can see Ramelius putting its foot on Spartan, etc. So that will, that if that sort of gets a head of steam, then you'll see people, perhaps speculating on who's going to be next, who's going to be the next target. Particularly, I think, there's a whole, and it's not a small part, it's a subsector, but it's a big part of the sector in terms of WA, Eastern Goldfields, miners, and guys sitting on attractive resources which might not be big enough or might not be financeable as a standalone. So there's a lot of that going on, and that if that sort of keeps growing, then you'll see that move out into the sector, I think. So that's probably the main two things, and then probably which complete speculation. What's the next hot commodity? Is it what's the next niobium? That's the things. Hey, just touching on what things that people don't understand.
It's like, what's the new gold? I think gold's the new gold at the moment. We'll see.
So, I mean, you show a chart in one of your recent presentations, Hedley, and you're talking about liquidity, like you just said. And I think you show the number of IPOs and raisings, and you can see the trend broadly from 2021 is not in the right direction from probably from our perspective. Is that what you're seeing, the trend? And do you anticipate that trend to continue downward, less IPOs, less capital raisings for the foreseeable?
When liquidity falls, it tends to sort of reach a low level, and then it might not stop, but it just kind of ticks along. So I'm not sure that you could drop too many more IPOs out of the market. If you go from a level of, say, 120 a year, which I think was circa the amount in 2021, coming into 2024, how many? If there was 10 or 15, you could probably achieve 10 or 15 IPOs by people who'd been preparing, were desperate to list, and just had dragged friends, family, etc. along to stump them up. With one largish investor, they would probably be able to achieve a listing. So in today's market, you still tend to be able to get that done. And that's probably the marker of the lowest that liquidity could go without turning it off altogether. So I couldn't say that you'd have to expect a real deterioration from here on liquidity. For juniors, I think capital raising conditions now are oscillating between the worst they can get and a small improvement on that. So were it to get any worse. I think probably where you would see that play out would be in the share prices of some of the major companies, because they're far more closely tied to broader commodity prices as their price driver. So, to your question earlier of John around what would you say would turn the cycle, I think a strong lead from commodities in one direction or another will direct equities. At the moment, they're kind of not going up, not going down. So I suspect if copper were to break through its upper end of resistance, you would see a lot of miners go with it. Gold, I think, could lead the space very strongly. And then there's a collection of others, and who knows what the next hot commodity is. We've had big ones in the past like iron ore, and we've had small ones like lithium. But they're all capable of generating a little bit of a liquidity buzz around them, and sometimes they can last. So I would say the best outlook you can think of on liquidity is going to be that it's going to be a struggle. The better stories will probably find a way to get funded, but they'll still be whinging about price. And, from time to time, there'll be something that comes along that surprises you. But generally, where liquidity pops up, it's where that, lack of understanding, sense of excitement about something that's not well understood creeps into the market, and people are keen to back it.
Quick break, but I can feel K-Drill bringing some excitement into the market soon, boys, facilitating some of these bloody exploration discoveries that Johnny and Headers are talking about. Look, if you think, I know, ding, ding, ding for you boys on WA1, but they weren't even looking for niobium. Didn't even know what the fucking thing was, but they were drilling. They were drilling. And you got to be drilling, and if K-Drill are drilling for you, you might find something you didn't even know existed in the ground or even existed in the world, and voila. Then you probably got Lowell Resource Fund and Line Selection Group chucking a heap of cash at you.
You don't drill it, mate. You don't know it's there.
Oh.
Yeah, there's but it's easier to just find some rock chip samples and tell the market that.
Yeah, that's when K-Drill get injected. Mate, you don't get a 5-star Uber exploration rating for sample management and drilling for no bloody reason. Let alone the bloody personnel attached, Drew Harvey and Ryan O'Sullivan. What more do you want in terms of talk about a recruitment powerhouse? Who wouldn't want to work for them too in a drilling game?
I saw K-Drill beer on LinkedIn. I'm going to have to catch up with some.
Well, it'd taste good. So, bloody mate, if you want holes drilled, get K-Drill. If you want to drill holes, call K-Drill and drill the holes for them. Get a job. Bloody
Couldn't have said it better myself, Matty.
Love it. Right, let's get back to your beautiful chat, JD. Boom.
So does this feel to you just part of a normal ebb and flow of a cycle and no real cause for longer term concern?
Well, I think it's completely tied to interest rates at the moment. I think if they were to drop, then you'd see that risk appetite come back. So, my outlook for how strongly could liquidity come back, I think it will come back. It always has. It's a question of timing and how strongly. And so I think it probably creeps back, as it has in most other sort of early booms, and turning from the end of the bust into the start of a boom has tended to be a slow occasion rather than something which is marked by a pinpoint.
Panning out, John, how do you see markets like the LSE, the TSX, and the lack of liquidity we're seeing over there? A lot of the feedback we've been getting is that it's quite dire, and some people say that's just a result of not many discoveries and more attention perhaps being put towards technology stocks and whatnot. Are you of the same sort of view as those opinions?
Yeah, look, I think at the moment, the tech stocks and the Nvidias of this world is sucking in a huge amount of capital. Also, it's just the divide between big and small is getting larger and larger. And that's obviously making it more difficult for juniors, particularly in North America. So I reckon that's going to be one of the indicators in terms of turning things around, is when we see the TSX venture in particular, start to tick up. Because we invest offshore, it's an indicator for me as to how many calls I'm getting from Canadian brokers to look at North American stocks, which the capital pool over there is so much deeper than it is here. But the fact that they're wanting Aussies to invest in North America and staying up late at night and calling me is an indicator of how dire it is over there. So when I stop getting those calls, that'll be a good sign that the market's ticking up.
Or all those brokers have quit.
Thrown in the towel. Yeah,
It'd be quite bad. So How do you marry this up, Hedley, in the face of long-term fundamentals? And, perhaps you can speak to a couple of different commodities or however you like, but that lack of liquidity we're seeing right now with the structural outlook for gold, copper, zinc, whatever.
Yep. Well, I think the outlook broadly for a lot of commodities, if you just want to be super general, is that a lack of investment over the past 10, 15 years, particularly since the mining sector really went on the nose in circa 2011. We saw every single budget across the sector cut from 2011 through to 15, 16, which is a really long, deep, horrible funding crisis for the industry, which was brought about by a lot of poor decisions and poor returns on capital, which have been experienced within the industry to that point. So investors said, let's put our money elsewhere. As that then played out, there's been growth in the sector, but spending on exploration and project development, when you level that up against historic spends, is very low. So we know that there is a crunch coming where supply just fails to meet demand, and I think that's across a huge amount of commodities. I mean, I think it's present in all of the main ones. And we've additionally seen this electrification theme not so much creep in. I mean, it's here, it's real. You said before, John, was 2024 going to be the year of ICEs or the year of EVs? And it turns out to be the year of the hybrids. And I think that's the point, is that it's difficult to show when the rubber will hit the road in any commodity market. But if you just look across all of them, this is coming, it will arrive, you just don't know quite when, and it'll probably creep in, and before you know it, it's here. People talk about deficits in all commodity markets. I mean, copper's a great one, right? We double the demand, for copper every 25 years. And in the last 50, we've used more copper than in every, the whole history of human consumption of commodities prior to that. So, something like copper, huge market, in desperate need of replacement, yet we haven't seen that impinge on the price to the extent that it would change the upper limit that people are prepared to pay for the commodity. So I think that, extending a forecast out over 3 to 5 years, perhaps we start to see that factor creep in where pricing does become tighter as a result of supply well falling short of demand, and demand picking up as economies find their way out of whatever funk they find themselves in, having to work through this current interest rate and inflation conundrum, and whatever else you want to add to that conundrum, global leaders or global tensions and things like that.
So continuing to speak to liquidity, John, we saw huge, one of the biggest proposed deals in the last few years, BHP going after Anglo, didn't quite pan out, but did you learn anything from their pursuit on how the majors might pursue getting copper into their portfolios?
100%. It's very obvious that they would prefer to buy rather than find and or develop, find and develop. So and I think that just taking a step back, that is good for the juniors. We have seen the big boys, from the BHPs and the Goldfields and whatever, starting to assist the juniors more. Whether it's by BHP's Explore program or becoming a 10 or 19% shareholder in these smaller companies or doing joint ventures. We've seen more of that. But it's pretty clear the big boys don't want to do all the really hard early work. They're arguably not as good at it in terms of getting heritage approvals, getting land access, and going and doing the drilling. So I think that's if you take a step back, that's probably good for the juniors. But as Hedley said, we've seen a capital drought, and there needs to be a huge amount more of money spent in that early stage area to make up for lost time.
And Hedley, you touched on China and electrification. I think the view for a number of years was that you could almost sub out China with the growing demand that's coming from electrification. Now that seems to be on a bit more shaky sort of footing now, but the calls for India replacing and a lot of other developing countries replacing that demand has gotten perhaps a bit stronger. How are you sort of viewing that? And do you agree with the notion that the demand coming from electrification has somewhat weakened in the past year or so?
Difficult to quantify actual demand. I think the perception of demand coming from electrification has probably weakened because it's failed to materialise as quickly as was expected. And as for it replacing Chinese demand, I mean, I suppose with Chinese demand, with Indian demand, or with electrification demand, all those big themes which sit in the mineral economics world that us who think about what the next 10 or 20 years might look like all have to deal with. People were talking about what the emergence of China was going to mean for commodities right through the 90s. And it wasn't really until sort of 2004, 5, 6 that China began to be a thing. And then it kind of reached fever pitch in 2007, 8, and then, it's played out from there. So, that's a 10 to 15 year theme of development where it wasn't right until the end of that period where people were kind of aware of it and forecasting it that it started to happen. So a different bureaucracy to India. India definitely has the population credentials to be able to be a big consumer, probably has a massive bureaucratic blockage involved in it, which the Chinese economy has the opposite of. It has a bureaucratic force rather than a bureaucratic blockage. And electrification, I mean, that's linked to so many things. There's scenarios where the oil price drops to a very low level. Who knows why it would do that? But, as supply and demand plays out for that, and if demand were to fall, then, what does that mean for the pricing of commodities to go into batteries in order to compete and make non-internal combustion engine vehicles competitive in the marketplace? Because at the moment, a lot of those things are being forced by government incentives. And I had a look on the Tesla website on the weekend and I couldn't bring myself to like the way that any of those looked. So, I'm kind of waiting for a decent looking EV to come along. I know it's a bit superficial, but, there are all these kind of adoption issues, I guess, which play into that demand picture. And it hasn't sort of reached that point of having its own sort of head of steam, I suppose. Now, I know I'm not delving into any of the themes which are below that, just sort of introducing thoughts and concepts. But I think that's something which will play out a lot slower than most people expect.
One of the a fascinating article I read on the weekend was that in China, electric vehicles are now cheaper than internal combustion engine vehicles. And that's a pretty sort of monumental step. So we often look at it from the perspective of commodities prices going down, bad for Australia. But in terms of the actual electrification trend, when you see these batteries coming off 50% in price year on year because of the falling commodity prices, perhaps it's not such a bad thing.
Well, it'll probably build a scenario where more and more people are familiar with EVs, own them, dependent on them, don't want to change back. And that's great for the EV uptake theme because I think that probably cements a level of demand which would be hard to do under higher commodity prices, or even just take a level, average commodity price.
Yeah, and probably supportive of the build out of the necessary infrastructure across the country. Before we get into the sort of specific companies that you guys hold, one more broad theme I'm keen to chat about is financing and how that sort of shifted over the past couple of decades. So we're seeing an emergence of more unique types of financing, streaming, royalties. They've been around for a while, but they're sort of gaining in share as commercial banks sort of take a bit of a step back from funding the development of mines, particularly in Australia. What do you make, John, of the perhaps at times opaqueness of some of these financing tools that companies are pursuing and the growing trend of their use?
Yeah, look, I think their use has sort of been forced on companies because of that pullback by traditional banks in financing the sector, and they're trying to cobble together a capital stack, if you like, of whatever they can, basically, because it is so hard, for a $20 million company to finance a $300 million project, no matter how good the NPV looks on paper. So and they are, I'm a bit of a skeptic about the benefits of streaming. You do end up paying a lot for that money down the track. So I think you've got to look at that very, very carefully. But and I think more broadly, this feeds back into partly why the junior sector has been so unloved, is that companies with development projects, the market doesn't believe that they can finance them. And it's almost a self-fulfilling prophecy. You can't finance that, so your share price is going down, which means it's even harder for you to finance that, in terms of the equity component. So, and I think, part of that, again, is the fact that, it used to be that, okay, the gold price spot went up and the gold explorers prices, shoot up. It doesn't seem that connection doesn't seem to have largely broken down a lot. And I think that's because, there's such a much longer time now between finding a bit of gold and getting it out of the ground. Average time to put a new mine in of some data is 17, 18 years. So I think that time gap makes it harder for companies to get their share price up and in turn, get the financing to actually build a mine.
And welcome to the finance options provided by Mineral Mining Services. How pertinent. Because tell you what, if you're small miners that want a low barrier to entry to get mining, haven't I got a deal for you?
Mate, tell me about it.
How good's this? MMS, the preferred mining contractor for WA, no doubt. Mm-hmm. What's that? Oh, turnkey solution. That's what I hear. Bloody, check this out, boys. You love a bit of a hybrid, bloody random approach. Here's what they did with old Black Cat recently. Provide all funding to develop and haul ore from the open pits to the Paddington Mill.
Yep.
Following recovery of the startup costs, the first $30 of cash flow goes to Black Cat.
Yep.
Then it's a profit share after that. So,
Gotcha.
bloody...
That's actually quite clever because it takes the risk away from Black Cat, who I think weren't prioritising mining from that project. They were looking at the pulse and stuff, and now you've got a de-risked avenue to actually get cash flow out of that. Where MMS are willing to take on the risk. They'll look at the model,
Yep.
they'll optimise it, and they'll be like, we're literally the miners here, so we know we can do it, and that they're going to be confident in that, and they take the risk away. And at the beginning, and then there's shared upside afterwards. Very, very innovative product.
Mate, MMS have breathed life into that pit.
Yeah.
Like that pit would be doing nothing if MMS didn't offer their turnkey solution. So I tell you, mate, they're shaking up the mining contractor space. So bloody, and gold development stories, I can feel the pages turning. I think it's because MMS, did you notice since MMS come on the show, how much there's gold stocks have gone up? Like the developers,
Bouncing.
not a coincidence. Give
No
Josh and the
coincidences.
bloody legends at MMS a ring. Get their yellow gear moving your dirt.
Do you think, Hedley, that that's a trend that changes over time? We've seen politicians in some countries have as one of their sort of policies that they'll put forward a cutting of the red tape around developing mines. Do you see any real change in there, or is that a trend that's here to stay?
There's been such a drive over the past 20 years towards all of the ESG metrics. I think it's difficult to cut that tape when you've been, instrumental in imposing it in the first place. And I think a lot of that stuff is fairly worthwhile. And it's not because we should have, things which are effectively blockages on the heritage and the environmental things that we need to look at. They all need to be assessed. There was probably a time when you could have said that most companies would do a fair job of it without being required to, and they would be regulated to some extent by the government in the area that they worked, particularly local governments, who had a bit of leverage, and the financial markets and debt financiers that provided money to them. Now, look, in any scenario, someone breaks a rule, breaks it badly, you impose a new and worse rule. In order to punish everybody, the 99% of the population that didn't offend are the ones that suffer for it because life gets harder. So I think it's difficult to go back from that. And I mean, a lot of these political ambitions are driven by what's going to read well in the press. Am I actually, as a politician, going to understand what's required in order to bring these projects online faster, or what indeed they require in order to thrive in this country? I don't think there's a huge political understanding of that really in Australia, despite being a country where mining is something which we're a very significant mining nation. So you'd think there'd be more sophistication around it, but a lot of ministers are not professionals in those spaces. They're effectively blow-ins to the portfolio, and then they manage it as best as they can whilst taking a political overlay to it. So I think those things are here to stay, and possibly beneficially in some cases, but it's probably overshot in terms of the time that it required to get a new project going.
All right, guys, time to talk about a couple of the companies out there. So a bit of M&A that came onto our radar last week was Rex Minerals, getting a sort of circa $400 million bid. And John, you hold Caravel, so they often get put in the same sort of basket as Rex, as one of the few gold developers out there. Do you feel a bit more optimistic about your holding in light of M&A happening?
Look, I think so. And that M&A for Rex, came out of perhaps a less sort of expected area, Indonesian billionaire. So it does mean that there is, money for these large projects coming from, different places. So not one thing, that has obviously dried up in Australia is, Chinese funding. And I think that also feeds back into an issue for juniors. But that in the case of Rex has been replaced with Indonesian funding, which presumably is going to get through FIRB. I touch wood, it should get through FIRB, no problem. So I think Caravel can be a bit more optimistic about finding the partner that they need.
Just on FIRB quickly, another one of your holdings I saw was CZR, which has the Road Mesa iron ore project currently under a bid. FIRB kicked back the timing, I think, at the end of May. How are you feeling? And maybe you can give a couple comments more broadly on FIRB and the role, perhaps the increasing role that they're playing in resource M&A.
Yeah, look, in that situation, we're told that it's just an overload of work that FIRB's got. But I think it has, that CZR thing has been, they've had FIRB have asked for like six extensions, so it should have happened back in March. And apparently there's no issue, but it is a Chinese buyer, so not that it's it's not material at all to Australian iron ore output, which largely goes to China anyway. But hopefully that'll be resolved reasonably shortly. But I think it just comes back to this issue that Chinese funding for projects has largely dried up in Australia. That I know that Chinese companies are still here in Australia talking to Aussie companies, but they're really wanting to talk about, have you got a project in Africa that we can look at? Or have you got a project in South America? Aussie projects here in Australia are they don't want to take the risk of a FIRB where they know they're probably more likely to get knocked back than actually get through.
You would have had a bit of a fright with the Azure takeover, having a little pause for a minute there, and going through without a hitch. But
and that I think the share price, the bid price $3.60. I think the share price got down to maybe $3.20 odd or something like that, as people sort of worried about what FIRB was going to do. But I think the bidders there were probably got a pretty clean bill of health in terms of South American and homegrown. So I was never too worried about it.
And Hedley, in terms of your base metal exposure, you've got a mix of listed and like unlisted companies. There's Sunshine in Queensland has a bit of copper amongst their gold and a few others. How do you sort of view copper and the attractiveness of copper projects, given your Australian first view of adding to the portfolio?
We're hoping to establish within the portfolio reasonable diversity across commodities as well as projects and jurisdictions to some extent within Australia. You don't want to be all eggs in one basket in one state, but so far, the best value we'd seen, particularly in some of the things we've had a bigger swing at, has been in gold. So sort of hence the explanation of a part-built starter portfolio. But looking for opportunities that offer the same quality as what we'd seen in some of the golds that we've invested in. And when you're investing in gold, anything else has to compete against the risk perspective of how easily can you separate the product and how easily can you sell it? Because in gold, those things are usually very, very simple. So it's been harder to find things in the base metal space or even the specialty or strategic space that offer the same sorts of, I suppose, risk-adjusted qualities that we're looking for. Sunshine we liked on the basis that it brought predominantly base metals into the portfolio, and then I think the second drill hit that they had after we invested was 20 metres at 17 odd grams of gold as they hit a feeder zone. So there goes that base metals diversity. They became more gold rich. We've got a bit of exposure and sort of in the exploration front as well through a couple of things which have got a sniff of copper associated with them, but it's a bit too early to say that they're a copper thing or a gold thing or any other sort of thing just yet. But very, very keen on trying to get into some of those. And I think in some cases, the ones that we're watching that we feel have the quality metrics that we're after are probably approaching the valuation level that we might be happier to take a swing at.
And another one of the base metals that has a pretty enticing supply outlook that a lot of people on the show have spoken to is tin. It's got a popular community that backs it as well, but a bit of a dearth of attractive projects out there, in particular listed on the ASX. But you've got an unlisted Atlantic tin position up in Morocco. Is that something you've, obviously being unlisted, haven't been able to sell, been stuck in for a while? How do you sort of view it?
We got involved in that company when it was unlisted, and then it spent about 17 or 18 years as a listed company on ASX, and it was subsequently delisted by its major shareholder, Parla, or the delisting was sort of championed by them on the basis that they would fund it privately, or they would lead the funding privately, and then look for an opportunity to relist it at the point where it made most sense. So I think the company's strategy at the moment is to find its way to a new listing and a more diverse register. At the moment, it's fairly well dominated by that one shareholder. There would be hundreds, if not over 1,000 shareholders in that company, I think, having been a listed company at one stage. So, it's got many of the things that it needs in place to list. It's just searching for the opportunity. So we always liked that project for its exposure to tin. It's reasonably high grade compared to most of the other development hopefuls in the tin space. It's in Morocco, which I think you'd have to say is a good country in Africa. It certainly doesn't suffer many of the uncertainties that a lot of other countries there do. The tin market tends to be up or down. It's nowhere in between, and I think that's what it was waiting for because that project has a DFS in place. They've just published, I think, a scoping study now, having purchased the next door neighbour mine from a different commodity, but that provides some underground access, which might get them into the hill at a lower level as a starter. It certainly provides a place to be processing from, and a bit of extra ground, which looks to have some tin mineralisation on it. So, everything has gone well for that, and it's got a lot of study metrics behind it. So, I think it's probably caught up in that process of how do you fund this into development, and does an IPO play the part there?
John, going to your biggest holding, Ramelius, this goes a bit against the grain. It's a big producer. You've got a lot of explorers in the portfolio. What's the rationale here, and how do you see the next few years playing out at Ramelius?
Look, Ramelius holding there resulted from their takeover of Musgrave. We were in Musgrave for a long time, really liked the Q project. But putting it into Ramelius, made a huge amount of sense. And we thought that 1 + 1 equals at least 3. So we've held our Ramelius shares, and it's been good. So I think Ramelius, Q will add 60,000 ounces a year from late this year, I understand. And they'll still have Penny delivering some really nice high grades into Mount Magnet. It sounds like they're probably going to do a cutback at Eridanus. And Edna May might that stage 3 might be put on the back burner. But I think this is something that's been a bit of a change. You're talking about inflation and cost escalation. I think cost escalation is starting to moderate. Wages are still going up, but with Nickel West, being put on ice from October, we'll probably see a bit of downward pressure on wages with all that workforce and services becoming more available. So other costs, I understand it, things like trucking costs are flatlining at least at the moment. So I think you're seeing costs level off, and you're seeing, in terms of gold, you're seeing the achieved price get higher. So the margin is starting to open up. So I think Ramelius will have a couple of really nice years ahead of it, and hopefully the market will wake up to companies like Ramelius going, gee, they're making a lot of cash flow, and let's give them a bit of a higher multiple.
Be interesting to see what size of portfolio they'll be managing in that period of time as well.
Yes, they could become fund manager, or maybe
So I've got to play devil's advocate on the next one because it's a holding that you guys overlap on, Saturn Metals. I'll start with you, Hedley. Yep. Why a 0.54 gram per tonne, big, bulk tonnage heap leach project makes sense, and how do you get the Aussie market comfortable a project like that.
Yeah. So, I mean, it is low grade, and that's something which I think a lot of the market has turned its nose towards because, low grade projects, particularly in Western Australia, if you were below 0.7, 0.8, you're really pushing into the realms of being hard to do. When you look at the resource of Saturn, it's predominantly one big blob. It's not a collection of 10 different open pits. It's not a ribbon of mineralisation. It's a big, thick blob. And it adds up to well over 6.5, I think 7,000 ounces per vertical metre and that's pit constrained. So if you took the global resource, which is where you often take an OVM rule of thumb off of, it's going to be north of that. It used to be that about 1,000 OVM was a good rule of thumb for will it be economic or not, and clearly that comes down to geometry and depth and metallurgy and other things. But the likes of Gold Road are sitting at about 12,500, I think, at Gruyere. There's plenty of really good projects in Western Australia which are 2,000, 3,000, 4,000 ounces per vertical metre. So whilst low grade, it's very, very metal dense within the position where the resource is. And because it's so wide, the ore zone's 100 metres wide in some places, you don't have to, in an open pit sense, be sitting on top of it with an excavator taking 2.5 metre flitches. You can mine a 10 metre bench in one pass. So it's much more economical mining, very low cost per tonne to mine, combined with a low strip ratio. So the dollar cost of putting it on a heap is well below what it would cost you to put a tonne of any other ore in Western Australia on a ROM pad. And then when you look at heap leach processing, I mean, that is by its very nature cheap because there's a lack of comminution. You're typically crushing to, well, in their case, they're talking about somewhere between 4 and 8 mils. Heaps are often in the order of 4 through to about 10 mils crush. And the metallurgy lacks a lot of clays. It looks like it'll percolate really well. They've shown very high recoveries in a heap leach context. From the test work they've done. And in fact, some parts of that deposit recover whilst low grade in a very competitive sense for CIL. So whilst it's something that I would say Western Australians, but Australians broadly aren't that familiar with, the North Americans are. And I think the North Americans which are on that register can see that project makes a lot of sense in their market. And they've bought into it knowing that, were it listed somewhere else or positioned somewhere else, it would be a very desirable asset. So we've compared that to a number of other global heap leaches and really like what we see. So having invested mid to late last year for the first time, we've just topped up with a bit of a bigger swing at it this time because we're very keen to hold a large percentage of that company. And for those reasons, the economics look great.
Has Hedley missed anything, John?
Look, just couple of small things to add that we like. One is there may be a concern there that the ore is quite hard, but actually I think as you mentioned from heap stability point of view and percolation point of view, that's and you can crush it relatively coarse. The other thing that's just happened in the last few weeks is the company has now gained access to drilling along strike from the Apollo Hill deposit on Salt Lakes. So there's some beautiful looking geophysical targets there which have been crying out to be drilled. Getting access, heritage clearance, etc., has taken quite a long time. But they're out there drilling now or about to start drilling. So there could be some, I think, it's really great when you're a developer, and the challenges of financing development to try and perhaps for the market downplay that a little bit and say, guys, look over here. We're actually got some exciting exploration, something that'll attract market interest, and that's what they're now able to do a bit more.
A lot of that ground position is under some form of cover. So the project Apollo Hill, it sticks up more or less, not as an island, but there's lake around many sides of it, and the main structural trend has lake sediments over it. So never been able to be drilled in the best positions other than where this little hill sticks up. And I think, the one thing we've missed, both of us, is the quality of the people there. I mean, we've been extremely impressed with the diligence of the team which are managing it. And, led by Ian Bamborough, who, as far as I'm aware, there's only 2 or 3 geologists in the world who were born in the same town in the north of England as me, and Ian's one of them. So we're a kindred spirit there. He's got a different accent to me, having lived in the UK much longer than I did. But a terrific team there, with a really big project, big company, understanding of technical diligence mentality behind them as well. So they're not a fly-by-night junior that's just trying to fluff something up. I think they've been extremely honest with the presentation of their data. So, if you were to compare scoping studies between projects. I tend to think there's a lot less fluff has gone into theirs as goes into some of the other ones that I read.
So just talking about fluff and perhaps lifestyle companies out there.
You come to the right place.
I've got to ask you, you guys have each got a lot of experience in the junior end of town, and there's been a trend that's sort of shone through in the past 6 months or year or so in the uranium sector. A lot of companies now, formerly whatever, zinc, gold, rare earths, now picking up uranium projects. How do you, and if you've got any sort of advice for retail investors, or how do you personally think, obviously you've got big contact books and understand, but how do you separate the companies that are serious about getting a project online or exploring for a proper project versus just milking the market?
Oh, look, I think, one easy filter that you can apply is, is the management, have they got good experience in the relevant commodity? And if they've been there, done that, come out of, 30 years in Cameco or whatever, then yes, those, they know what they're doing in uranium, because it can be quite a different, metal to explore for. It's not, okay, we're going to go and take some soil samples and we'll look for, copper and gold and, lead and zinc and whatever, all in the one assay. It's quite a different, in terms of exploration, but also in terms of development, quite different. And obviously permitting is about as challenging as it can get, for any commodity. In uranium, I think that, timelines to get through permitting are quite substantially longer than for a lot of other metals. So, I just, that's an easy filter. Just say, have these guys done it before?
Yeah, tenure, I think, in the space, in uranium, but a lot of the ones which have had the best runs were not discoveries in this cycle. They've been companies which had projects already. So they had access to a resource in the ground, and they've been able to ride the sentiment coming into the space. So to layer on top of that exploration risk, would make it more difficult. But the companies which have thrived have not been fly-by-nights that have just, changed their spots towards being uranium. There are some which have got a lift off of saying, oh, well, I tried gold 5 years ago, and then I did lithium, and then I did graphite, and then I did rare earths, and now here I am with uranium. I'm sure they'll find some buyers and they might get a little bit of a run from it. But, I think the sustainable delivery of value has come from actual projects so far. Now, it might be, if we maintain this uranium market for a little while longer, we'll start to see some of those fly-by-nighters do a little bit better. But, they'll be the first ones to wash out as well on the other side.
Beautiful. All right, time for a bit of underrated, overrated, gents.
There we go. My favourite part.
All righty, John.
I've notified my lawyer, so.
All right, let's get into it. We've got a mix of companies, commodities, a whole basket here. John, I'll start with you. De Grey.
Great. Look, I think, they're coming out the other side of the Lassonde curve orphan period. And, they're funded. In fact, I think they've got more than they actually say they need. So, look, I think, at $1.10, and I think they're probably on the underrated side of things. The Gold Road stake may, be a bit of a block. So that sort of tempers my excitement a little bit, but I think it's an interesting play.
Are we going with convention here and giving a long reasoning, or are we just going underrated, overrated?
Good question. Let's cap it in the interest of time at one sentence. Okay. If you feel the need, if you want to keep it short and sharp.
I'm good with long sentences.
So
you might have to cut me off at the 10th comma.
This one's a bit different, Hedley. Iron ore to be under or over $100 by the end of the year.
When they say you can find and make forecasts, just don't put a time on them.
Okay, so I can't say underrated or overrated to answer that question. I would have to say that I'm more of the view that iron ore will have softness. So I'm going to say the risk of it being sub 100 is high in my mind.
Alrighty, John, Metro Mining.
Yeah, bauxite. Look, I think I haven't looked at it closely, but I think in terms of the industry, and the bauxite price, underrated. Yeah,
very good. I'm not sure if you've looked too closely at this one, but Lynas, and if you haven't, you can comment more broadly on rare earths.
I know I'm going to get myself in all sorts of trouble here, but
that's why we do it.
I'm going to say, yeah, it's a setup. I'm going to say overrated. And the only justification I'll give to that is that rare earths are an incredibly difficult space to operate in. I think they're a great space to find something in if you're interested in equity value accretion. to operate in, it's difficult. And so for that reason, I think Lynas is perpetually overrated.
John, Ozgold, the Katanning Gold Project.
Yeah, look, underrated. I think it falls into the basket of companies that have been trying to get finance for some time, and they've got a relatively modest market cap compared to their financing requirement.
I'm going to throw a couple at you guys in a minute, but you go again, JD.
Okay. I'll give you one that I think you hold, John. Southern Cross Gold.
Overrated.
Overrated.
Yep.
Juicy.
I don't mean any, sometimes when you get to justify these things, you can soften that. It's run hard in the market, and, full kudos to management for being able to achieve that through the clarity which they've put around the way they describe it. So, by saying overrated to some things, it could mean, I think it's shit. In the Southern Cross perspective, I think they've got a really bona fide play that they're running at there. And they've experienced substantial share price accretion in a market which that's hard to find. But that pushes it into the overrated for mine. That's the reason.
Like the rationale. John, Prospect Resources, looking for copper in Zambia.
Look, I'm not really familiar with it, but I think Zambia has seen quite a bit more stability of late. Had to pull back on their royalty hike ambitions, and copper obviously is something that everyone's after. So and it's elephant country.
Might be right for a down cycle in stability and royalty rates then.
Headley, one we touched on briefly earlier, niobium.
Well, that was one I was going to throw in for you, actually, for you guys. But since you've snatched it from me, I'm going to say overrated. And that's on the basis that it's easy to get excited and pay far more for something that you don't understand than something that you do. So there's part caveat that I don't understand it very well, and part, finance participant instant dismissal of something on that basis.
No, I like it. John, Turaco.
Yeah, look, possibly had a pretty good run. So they're in southern Côte d'Ivoire. So perhaps a little bit on the intermediate to overrated side at the moment. Yeah. But great project. Yeah.
Do you reckon? Do you have any for? I mean, I just reckon. Can I throw one in here, JD?
Let's do it.
You've asked all the questions. This is not a hijack, but for both of you, Anglo-American.
American. I would lean toward overrated, thinking that executing, I think the sort of some of the parts is compelling, but the sort of strategy will be very difficult to execute upon, and I'm not filled with confidence that management can execute that.
What do you reckon, John?
Yeah, look, I think, BHP showed quite a bit of discipline in not upping its bid from its third round. That was probably at least full value. So, I think probably overrated. Mm.
Gotcha. All right.
Got another one?
Silver.
That's one I had.
Oh, good. I got in first then.
So a lot of the sort of silver, I mean, I struggle to say it's overrated because I don't think it's had, bar a little run in April or May, a bit of excitement came into it. But bar then, it's been pretty unloved. Of late, there's been a bit more consensus building around the demand side from solar and whatnot. But I think that's still quite small and, quietly spoken about. So I'd probably have to say underrated on those sort of grounds.
What do you reckon, John? And perhaps you could blend into your answer, this supposed correlation with gold, which gold goes up, silver should go up, which often creeps in from I won't call them silver nuts. I've heard a lot of other people call them that. But
Crazies. Look, I think that correlation is real, and, it's possibly driven by, sort of the Asian demand in terms of, we'll buy gold when it's cheap. We'll switch some of that into silver when there's arbitrage. So I think that is real. Look, in terms of industrial demand, definitely growing, but there's more than enough silver stocks to meet that, I believe. So look, I think I'm positive on gold And for that reason, I'll say silver's underrated.
Nice.
John, I'll sling one to you. It's had a real fly the last couple of weeks. Encounter, so it's on the same theme as niobium. What do you think?
Yeah, look, I think the market cap's, pushing, to 300 million, something like that.
At least 300 last time I looked.
Yeah, so look, and I'm a bit of a skeptic on niobium. Having said that, a lot of the minor metals are doing very well at the moment. So look, for a exploration play, but on the other hand, you're seeing WA1, with a $1 billion market cap. So look, there's plenty of upside there. So look, I'm going to say underrated just on that basis. Yeah.
Hedley, I'm not sure if you've seen this one, but a small tin company in Tasmania, Stellar Resources.
Yep.
Underrated or overrated?
I'm going to apply the judgment of would I buy it at this price? And if I would buy it, then it must be underrated. And if I wouldn't buy it at this price, then it must be overrated. So on that basis, and given that there's tin processing in Tasmania, you might not have to build that project yourself. You could arguably sell it. I'm going to say underrated.
I like it. John, hot chili in copper in Chile.
Yeah, look, we used to be holders. I think they probably have gone into that slump of trying to raise development finance. So a tough one. I think I think they've got a few years ahead of them yet to get through that slump. So perhaps using Hedley's example, I probably wouldn't be buying it today.
Hedley, catalyst metals.
I've swung from one extreme to the other on this one over a decade. I really have a huge amount of respect for what James de Crespigny is. Sorry, didn't pronounce his full name. James Champion de Crespigny. Been pulled up on that before. I think he's doing a fantastic job there. I've got full respect for a guy who will nail an M&A deal and then go and spend 3 to 4 days a week working from site to show the team that he is absolutely shoulder to shoulder with them. And I think that asset has the capability to deliver under the right team, and it looks as if they've identified the people that they need to do that. So I'm going to say underrated and wish them the best from there.
John, Aries Resources.
Aries.
Yeah.
Yeah, look, I think short answer, underrated. Fairly modest market cap, great team, and in the right commodity.
Hedley, you got any more for me?
Do you have nickel on your list?
I do not. Do you want to sling it towards me?
Can we do it in a 2-part question?
Sure.
Okay, so underrated or overrated, gents? Nickel. Part A.
I'll take your view of would I buy the metal at the current price. On that sort of basis, I'd say overrated. I think the what's continuing to come online is quite overwhelming for the few years to come.
Yeah, look, I'm more optimistic. I'd say underrated. I think Indonesian production is having a few headwinds. They're having to import ore from the Philippines, and that's they're on track to be I think 75% of world production. But I think some of the high grades have been mined out. The easy wins have been had. Jim Lennon is saying we could see a much smaller surplus than expected in the second half of this year. So a bit more optimistic.
Yep. Part B. I'm getting all Keith Good on you here. Let's get emotional about nickel for a moment. Overrated or underrated? Western Australian nickel projects as a whole. Because that's where all the emotions come from, right? Oh, nickel price is killing us. I suspect if you found another Nova Bollinger now, you'd be financing it and you'd be going forward and you'd be doing okay. But they're not all over Bollinger. In fact, most of them are the direct opposite of that. So maybe I'm leading the witness. I've teed it up. You hit it as hard as you want from here, gents.
And maybe 50 years ago when a lot of the mines started, it was a bit more meaningful. But probably just have to say overrated again. I mean, it's awful the amount of jobs that are lost, but hopefully that flows on to have positive effects with other resource companies around the state and around the country. But there is a sort of reason, and perhaps part of it's because they're operated by majors, BHP to an extent, but at the end of the day, they're just not profitable mines.
Yeah, Yeah, I think taking the smelter out of the Kalgoorlie operations, that makes it that much harder for other nickel developers in the region. Obviously, there are other homes for nickel con, but so from that reason, I think there's going to be a bit more of a headwind for the other guys.
Probably a net positive if you look 10 years into the future, though, I expect. So, which is hard to stomach against the people aspects of it.
John, I've completely lost track of time and made you late for your next meeting, but appreciate you guys making the time to chat with me today. Thank you.
Thank you for coming all the way to Melbourne just to see us too, JD. It's been magnificent.
Just for you guys.
Thanks a lot, Jonas.
Good on you, mate.
See ya.
Lovely chat, Jonas Benedict Dorling. That was bloody brilliant, mate.
Mate, that was... Credit is all due to John and Hedley. Great to get them on the show again and get a bit of a zoom in on the junior end of town from a couple geos, hey?
JD, I reckon you could easily have a pod because your answers to headers as overrated, underrated were at the level, if not beyond, what we hear from the fundies themselves. I was impressed, mate. Geez, you're just like a glove.
I highly doubt it. He caught me off guard a little bit there, Matty, but I appreciate the kind words.
Fuck, it's beautiful. You know who else is kind? Axis Mining
Technology.
Very kind. And the rest of the bloody partners. Mineral Mining Services. What a shake-up happening here. VRIFY, GetWet Solutions, DSI Underground, Silverstone, CRE Insurance, WA Waterboards, K-Drill, and a bloody spark chart. That's kind on your eyes. Good work, JD. And hoodaroo, money
lads.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.